Greetings, Dr. Jeffrey Scott here. This is my market MRI Pro update for Tuesday night, December 16th, 2025. I'm trying to sneak this in while my wife is getting all of her birthday calls because I didn't think I get to do one tonight. Market staged a bit of a reversal mid-afternoon, enough so that the Qs turned positive at the end of the day. Will the rest of the markets follow is the question. Again, it's December 16th, 2025. Jeffrey Scott, marketmripro@gmail.com, Google Groups called Top Down Trader, and www.marketmripro.com. As always, these are for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is to show you how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors before making trades, and I've got tools in multiple platforms. My Google group's called Top Down Trader. That's how I support the people that like to follow me or have bought my products. I post an email most nights. I will include videos there, let you know if I post something on YouTube, and every once in a while sneak in a multi-hour educational thing like we did this past weekend. For more information about anything I talk about, any of my tools, if you're interested in purchasing them or questions, marketmripro@gmail.com. If you have the tools and are having any technical issues, or if you have ideas for new features, coding at marketmripro.com, and consider joining Top Down Trader, the Google group. I'll tell you, owning your own platform is good and bad. Um, there are a lot of expenses in maintaining the platform. You have to deal with data issues, corrupt files on more often than I'd like to. But the cool thing is, if somebody calls us up and says, "Hey, I like doing this. I think it's a good idea," we can build it in from a charting perspective and a scanning perspective, and do it very quickly. So it's cool to have your own platform. Expensive, but cool. All right, so as I mentioned, there was a bit of a reversal during the day. If you look at where the lows were, you could see the Qs were down 0.59 at their low. Spiders were down 0.84. Diamonds were down 1%, and the Russell was down 1.37. Sometime around 2 o'clock, markets turned around a bit. Bitcoin actually finished up 2.17, closing in the upper part of the range. That's a nice thing to see. Qs finished positive at 0.2 off their lows at the 3/4 of the way of the range. Volatility was relatively flat. Dollar was down 0.11. Spiders came back, were down 0.27, the diamonds 0.66, and the Russell 0.81. Certainly not a resounding bullish reversal, but I don't know about you, but I was watching my portfolio, what I've got left in it, and started out okay today as the market was trying to digest all that employment news. And then around lunchtime, it turned negative. I figured, oh, here we go, another day in the market. And then I looked at it again later on. I've got a big presentation tomorrow, so I've been busy in meetings all day preparing for that. And it was positive, and it traded higher into the close. So maybe the pullback is over, and maybe the market got the news that sometime around the 18th it's supposed to start rallying with the Santa Claus rally. So we'll see. What else can I tell you? New highs minus new lows deteriorated, still positive, but less and less each day on the NYSE. Turned negative on the NASDAQ as the number of new lows increased. Here's 3 different indexes. We can look at the sectors, industry groups from those indexes, percentage advances of those indexes. And you could see the color is today, the gray is yesterday. The S&P 1500 deteriorated. Only 31 stocks were advanced. The NASDAQ actually looks a little stronger than yesterday with 43% up, not resounding 80% up. And the NYSE weakened with 33% up. So this has not been a traditional market collapse with all kinds of supporting indicators. It's been much more of a pretty ferocious rotation. But today, if we look at the S&P 500 sectors, it seems like we're back in the summer with tech, communications, and discretionary up on top. And the laggard was energy, healthcare, and real estate. So rotation, rotation, rotation. Is this just more rotation, or are we about to see the market start to turn around? Hope so. If we look down here, we could see that Cannabis was up today. It was down yesterday. I think it's going to be very volatile as we wait for the change. And I got a feeling that the change I'm referring to, which is the government going from a Schedule 2 to a Schedule 3, is you buy on the rumor and sell on the news. I just don't see how these cannabis stocks all are going to do well. Um, we've seen it with energy drinks. We've seen it with other things. You get so many companies in the same space, and that initial enthusiasm wanes, and not everybody survives. Other leaders today: fintech, software, cloud, solar, cybersecurity, artificial intelligence, blockchain, metals and mining, internet, all were up. Everything else was down um, on the 1 day change. Interesting. Oh, I rotated on the wrong one. Sorry about that. Sometimes I hit the percent from open, not the 1 day. See if that changes anything. Not really. If we look at what the laggards were: oil, gas exploration, MLPs, clean tech, biotech, which has really been doing well. Home construction, which I think was Lennar tonight, had less than stellar earnings and projections and was selling off as well. So there's still some weakness there. From a timing model, this is the place you want to see the market bounce. We have flipped the bongos, which is one of the two parts of my timing model, on everything but the diamond. So we've gone downtrend on the spider bongos, downtrend on the Qs. This is the daily, very short term. Down on the Russell, but still positive on the diamonds. The second thing that has to happen is we've got to close under the WMA, and that will trigger a sell. So the only thing in a sell right now is the Qs. Do we bounce here and go on to new highs? I'd love to see it. Right now the futures are down. Or do we break below and start having to be a little bit more worried about this market in the short term? Time will tell. On the weekly, everything is still in a long mode, although the Qs have flipped to a, a short-term downtrend on the bongos. If we look at the U.S. index ETFs, not a whole lot of change today. We'll take a real quick look. Spider traded down to the 50 and bounced. That's really good to see. Um, really good to see. Um, Here it is right underneath the 21-day EMA, pretty much at the 21-day EMA. We'll see if that bounce holds and we go higher. That would be great if you're still bullish and holding a lot of long positions. If we look at the Qs, Qs broke below the 50. That's not good. But they did close higher than they opened, and they were up on the day, up 0.2. Yesterday was the close below the 50. So a little bit improved today. If we look at the diamonds, haven't pulled back much at all, still above the 17, not broken, probably the strongest right now. And then if we look at the Russell, we can see that the Russell had a doji today after 3 down days. Sometimes after 3 days, pulled into support the 17, you get a bounce. We'll have to see. If we look at volatility, certainly it's not roaring higher. And you can see the VIX futures actually look pretty flat. They were down 0.3, while the dollar, we know from a few minutes ago, was actually down a bit. I'm not going to actually do the dollar today. No reason to see. Closed, looks like it closed higher than it opened, but it was down just a teeny bit. Looking at commodities. All right, gold continues to look strong. Holding up here, maybe a little bit of a flag before it goes higher, up just a teeny bit in the session. Natural gas was down a bit, but also holding right off of all-time highs. Oil, wow, you would think going to war with Venezuela or whatever we're doing down there would cause the markets to rally because of supply. But I think the only ones that are going to lose supply are the Cubans, and you can see oil is just dropping hard. Let me just say three little words: SGR, strategic gas reserves. Maybe it's time to start filling them up as oil prices have dropped. Natural gas, um, another doji. We'll see if this is the one where we rally but boy, it sold off hard. And then look at the 10-year was actually down a bit today. Hard to see that there, 0.69. And you look at the 30-year down, was up, no, down 0.52. So dollar down, 10-year down. That's a kind of ingredients to get the market to go up. The buckets don't really give us a signal. The number of stocks below 9% on the NASDAQ, nothing above. We've moved from being very heavy at the top to less heavy at the top, a little bit more neutral posture. If we look at market breadth, you could see the NYSE starting to break down, still well above 50. The NASDAQ composite, which closed above the 50 yesterday, looks to me like it closed either at or above the 50 today. Um, Trying to get back up. That would be nice to see. Stocks above various moving averages are selling off. No surprise. Haven't looked to see what the volume was, so let me look at that very quickly. I look at the same source for volume. Volume was light today. Maybe we should expect that going into the weekend. Stocks above new highs, as we said, going down. New high, new lows mixed. Positive on the NYSE, negative on the NASDAQ. AD line downs. Up down volumes mixed. Positive on the NASDAQ. No new signals down here, and that's been interesting. And when you don't see signals and you think you might, you start to wonder, is it the program? Well, I validated elsewhere. No, the market is just slowly rolling over and rolling over and rolling over. I feel like I'm at a frickin' roulette table wondering which industry group is going to, and which sector is going to work today. It's a tough market to trade, but at the end of the day, we're still not that far off our all-time highs. And maybe we're getting to the place where the market's going to bounce. And if we look at the larger market breadth tool, just concentrate on the 13-week new high, new lows. 0.64 in the spiders, 0.65 in the S&P 1500, 0.71 in the Russell. All these have come off their highs, very neutral. But look at where the Nasdaq has dropped to 0.37. You're getting close to where you think you might see a reversal here. Not anything oversold reversal, but whatever heat we had in the market, especially on the large caps, we had heat back here. Um, it's eased off. If we go into the sectors, I still got an issue on the ratio charts with the hourly XLU, but not the daily. So it's something the data provider has to fix. But you could see discretionary and staples both look okay. Communications may be turning around. Materials looks good. Gosh, how good do industrials and financials look? So it's just rotation out of tech, out of tech. And here's tech still looking kind of wonky. If we go into the JS layout, I'm going to go relatively quick tonight because it is my wife's birthday and I'm not supposed to be doing this, but top down perspective, looking at the broader market of almost 3,800 stocks, leadership today was communications, utilities, and technology. If we look at the top 10 industry groups based upon return, power, 2, 3, 4. And it feels like summertime with the changes there. 403 stocks. Let's put it down here to $5, 500. Let's then rank them by positive impulses. Let's just look at some of them at the top. VERX, Vertex, kind of sold off too far for my interest, whether it's bouncing or not. INTA, Inta App, like to see it above the 200. Affirm, I don't love the name. It's been very volatile, but it has been strong. It's probably the buy now, pay later king. I've played Sezzle in the past, but look at this. It's breaking out here above the 50. Great volume breakout momentum from a squeeze. Good relative strength in OBV. I kind of like a firm here. Let's see when earnings are. Earnings were in November. Next earnings aren't until February. You get 28 cents versus 23. Not a whole lot of growth. 5 out of 23 is 25%-ish. But until we get there, plus we don't know how much of a surprise, and this thing is known for massive surprises. ACIW, still below the 50 and the 200. Vista Corp, a utility. This is one that's very involved in the data center world. This and CEG is another one. Be interesting to see if these start putting in a bottom and start moving. Does that mean the whole complex? TLN, this is another one involved in the data center power world. Let's look at Mannheim, Manhattan Technology, Twillo. Twillo looks the best of all of them, breaking out to new highs. Is it getting extended? That's the only problem. And nope, not extended. So that's top-down perspective, and a couple of these look good. Affirm looks especially, maybe Twillo. Another way I like to look at is bottoms up, and I'm just going to show you one stock, and then I'm going to run. But if we go into my impulse, and let's take those out, and let's just drop in the A plus. I'm just going to remind everybody this thing doesn't seem to be trading anymore. And so it's stuck in there because it's the last trading day. I'm going to talk to Praveen about getting it pulled out. But Jones, JCI, and why I like JCI, are we in an uptrend? Absolutely. Look at the short-term seasonality, whether I'm looking at all 10 years or 5 years is positive. Nice uptrend, breaking out, double momentum from a squeeze, relative strength, OBV looks good, not extended. I'm going to look at JCI tomorrow. If this market trades higher and gives our reversal, this is one that I'll be looking for to coming out of the chute. And we're going to look at 84 cents versus 64. 20 out of 64 is almost 30%, 33%, equals what the multiple is, pays a small dividend. Any surprise? And I think you see this thing move. Have a great day. No one says the market has to reverse tomorrow. It just gets a feeling that we're getting close.